Students and working accountants, welcome to my Expert Tally Train YouTube channel. My name is Babu Rao. Today, in this video, we will learn about the accounting entries in Tally Train relating to the reverse charge mechanism of GT. So, before entering into the topic, so a request to you. So, many people, they are entering my channel, they are watching the videos and going without subscribing. Please, my request is everyone, please subscribe my channel once. Only once you can do. Subscribe definitely without fail and click the bell icon next to the subscribe button and select all. You will get notification for all the videos which I upload in my channel. And also share my channel with others also. And another most important thing is please, everyone, watch every video till the end. Don't skip in the middle. If you skip the video, up to that point only you can know and understand, you will know the subject or topic. The remaining part of the topic or subject, you will not know. It will be like half knowledge. It's a waste of time. Okay. So, please watch every video till the end to get very good knowledge about this topic. And if you watch one, twice or thrice, and if you make the proper practice, then you will get expert knowledge. Okay. And I will think on the thing. See, we are going to the college. In the college, we are attending the classes for BA, BCom, BSc, or any postgraduate, anything. So we are attending the college for our academic qualification. But here, and academic qualification and in the college, we spend or we sit in the college for at least 2 to 3 hours every day. But here we are learning, we are undergoing the training for Tally Prime software expert, the professional training we are taking. So for this also, you have to spend the time, at least every video will be less than 40 to 50 minutes or maximum less than 1 hour. You have to spend the time and watch the video till the end. And if you watch the video till the end, if the video is good, you please like the video so that YouTube people will share this video with many people so that many people learn this subject. Okay, now we will enter into the topic. So I am sharing the screen. Yesterday in the last class, we completely discussed about the reverse charge mechanism, all the provisions under section 3, 9, subsection 3, subsection 4, and section 5, and all the rules and regulations and the provisions relating to the related to the reverse charge mechanism. So 9.3 goods and services, specified goods and services are given in 9.3 as applicable, and whether the supplier or seller is registered or unregistered and the buyer is registered, this 9.3 will apply for specified goods and services. The most important service is GTA, means Goods Transport Agency. We discussed about this. So for the Goods Transport Agency, and one more thing is under section 9, the seller may be registered or unregistered. This reverse charge mechanism is applicable. And in the case of the buyer or the recipient, you will be a registered dealer. And then 9.4 applies to only real estate builder or promoter, and 9.5 applies only e-commerce operator. We discussed it. And now the services, GTO is the most important service. All other services also the same like this. It is in the same. For all other services, the rate is 18%. But for GTA only, for RCM, for if the GTA is registered or unregistered, the RCM is applicable at the rate of 5%. Whether it is registered or unregistered, 5% RCM is applicable. Means the recipient of the service has to pay 5% of the tax, GST, directly to the government. It is called as an RCM, and then claim the ITC. But for unregistered, no choice, only 5% RCM. For registered GTA, so also 5% RCM is applicable, but another option is given to registered GTA. That is, we can select or choose 12% tax rate under forward charge mechanism. That is, collecting from the recipient and paying to the government 12% forward charge mechanism. In that case, The recipient will not have any RCM liability. Only for this 5% liability, if the goods transport agency does not select or does not choose 12%, then only 5% is applicable. RCM is applicable. The seller, the receiver has to pay the tax and claim the ITC. But in the case of 12%, if they select, then they will charge the tax in the invoice. For example, they will not charge the charge. They will not charge the GST. But for 12%, if they choose, they will charge the GST in the invoice. That means in our invoice also we have to put, we will pay to him, to the GTA. GTA will pay to the government, and we will get only on that. We are paying the liability to him, the amount, but we need not pay the government any amount. And the ITC automatically will get on this 12% amount. Okay. And now, what is the accounting treatment for this RCM? GT RCM. Everything is same. Every entry, everything is same. Just like servicing. Receiving the service, you will enter. Okay. But the only thing is, for this, for 5% RCM of the GTA, who is not selected, who has not selected 12% on the FCM and is registered or unregistered, we have not registered, not selected 12%, and unregistered or registered, not selected means 5% will be applicable. So for that, the RCM is to be paid by the recipient. So for this, the services received from GTA is called transport charges or freight charges. So the freight charges will be under liable under RCM if the 5% is given. That is this GTA did not choose this 12%, 5% RCM will be applicable. In that case, we have to pay 5%. So the freight charges on which RCM is applicable. So in that service, when we are creating the lecture, we have to enable the option. They enable the option reverse charging mechanism, and automatically in all the payments we will get the ITC. These two will enable, and ITC will be as always to be enabled. And these freight charges when you are paying to RGTA and RCM, we have to enable the reverse charging mechanism. But also we need not record anything. We will pay the thing to the GTA, and we will record we will charge the tax. We will also enter the check for this. So there are two problems given. One is some transactions are given. Problem number two, the same transactions given more number of transactions. You see one thing. You when you are watching, when you are practicing, stop problem number two. Pause this for a few days, for few transactions. You see that, complete that, then go up and take the remaining part and work out and practice the. And in this one already I'm working here. You are watching this. This also will pass, and this problem also you work out. So this I am working now. So here I am going to the tally. So actually for this RCM, I for this RCM, I created the company. So RCM accounting GTA. So creating the company is the same. Go to order. You can see all the details. You do all the details. And it is accepted. If it is a new company, automatically you will go to the and then F11 features. If it is an existing company, you will go to the directly click F11. You will go. So in addition, this is servicing we are receiving from the GTA for transporting our goods from the seller to us. So for that we are getting the transport service from GTA, but we may be manufacturer or trader already. So we will be dealing with goods. For this, it is a service. All other transactions are goods, inventory transactions. So maintain accounts, yes. And if there is inventory, so what we do? Enable device entry should be yes. Okay. And then inventory also required. Maintain inventory and integrate accounts with inventory, and then come to this one, what we call goods and services tax. So enable this and do the details of the goods and services tax, GST details and tax. So company is created, all the required options are required features in F11. We selected enable them. Then now we will go to the vouchers. In the voucher, what are the required ledgers we will create? So first of all, date is 1724. 1724. So go to this one, select 1724. The date is click F2 1724, and we are, but see here, we are getting the service bill. We are getting the bill for the service GTA. See, we received a transport charges bill from GTA unregistered from Hyderabad for 10,000 under RCM. Registered unregistered, RCM will be applicable unless the registered GTA selects or chooses a forward charge mechanism 12%. So in this, you will take up here. We are purchasing the service. So go to F9. So purchasing the service. But generally, here we will be making the entries for all goods transactions, all the inventory transactions. So our purchase or sales invoice voucher will be in inventory in this what we call item mode. Item invoice. Item invoice means dealing with the goods. But now, so whenever we are dealing with the goods, we are entering the entries relating the goods. We will enter in the item invoice only. But now for this entry, we require only accounting. It is a service. So change it to accounting invoice, change it to accounting invoice. Now we will take up, suppose I'll give some number. Whatever number is given in the invoice of the transporter, that we will give. The name of the transporter is here. I created. We will create the name of the person and the details of the person. But here to understand easily, GTA, the name of the GTA we will create GTA unregistered. Unregistered GTA we selected. So here, what the name? See, local registered. Unregistered is local only. Hyderabad means, see, Hyderabad means our state only. That is, I mean, Telangana. So unregistered dealer 5%. Okay. So unregistered dealer 5% on RCM. So selected that. Accept. See, unregistered dealer, the same state. Accept. Now here, the service charges, that is, the transport will charge, the GTA will charge transport charges for RCM. So we are liable to pay to the government the tax and the ITC we can claim. So generally, our supplier of the goods, he will send the goods to us by the transport agency, GTA. So for that, we pay the charge. It is called as charging for the transport charge. We call them as right charges and create them under direct expenses because the goods which we purchase we receive through the GTA. That is why, see, for that we call it as, we create the lecture as right charges RCM right charges. It is we take as direct expense. So space bar here. Right charges RCM. Under RCM we are paying the right charges. We take this. See here, direct expenses we will take up, and here applicable specified details here. Give the SAC code because this is service. SAC code, the taxable. So this is RCM 5% is required, and then it is service. Okay. So then here with this there is one more option required for this right services from the GTA. RCM is applicable. We are liable under RCM to pay the 5% directly to the government. For that, we have to only in this right charges related to the RCM on which right charges on which RCM is applicable. We have to enable the reverse charge mechanism. For that, we go to F12 and on the right side, see here, on the right side, tax details, tax registration details, then GST details. In the GST details, this is GST only. The GST details come down, nature of transaction, high here, and then come down. See, enable reverse charge calculation, it is more. To make it, yes, so it is enabled, and input tax rate also we will get for not only this, any service or any good, we will get the reverse charge. I mean, input tax credit we will get. So we will also make it as always you keep it as that in other cases also it will be as, except this the RCM is not applicable. RCM applicable to this transaction, that is reverse charge. I mean under reverse charge mechanism, right? Okay, come down here. Yeah. So after this number, after that the rate, it will come down here. Applicable for reverse charge. We enable that yes, no. It is showing yes. It is not applicable, we will make it no. Yes, and it is eligible for, you will pay the tax and you will get the ITC. So it will be yes, and services we have to take it, accepted. So we accepted this and we will take what is the amount, 10,000 rupees. 10,000 rupees. In these, the person These right charges are liable to come under the RCM. So the GTA, he will not take any, will not charge any tax in his invoice. His invoice only that the transport charges you collect from us. So in such a case, in our book also, we should not have any tax. That is why we enabled, we will pay that, but we have to pay. But in the local unregistered dealer under the RCM, for RCM, we enable reverse charge. So we will not pay any tax. We have to pay. Okay. So Alt A here is called as tax analysis. Alt A for C local purchases. CGST and GST is given 500 rupees total tax as per calculation. As per transaction, no tax is available. No tax is applicable. That is why it is showing as per transaction, not showing anything. Otherwise, it will show error. And here it is given this tax, amount of tax subject to reverse charge means this tax is paid directly to the government and reverse charge, I mean, ITC is to be claimed. So this is the thing. So now we made the entry, the reference, and now you see the effect, you will see effect of this entry. If you go to balance sheet, the balance sheet, there will be no duties and taxes liability because liability were not paid because the tax amount were not entered. Okay, so no liability or no ITC. Okay, and then but here we have taken. See, we purchased goods, we purchased the service for 10,000. So Sunday creditors is showing. Sunday creditors means the Sunday creditors GTR registered 10,000 rupees. And for making the payment, I took capital and bank 10,000 rupees. Otherwise, it will show a negative when you make the payment. It will show a negative balance, minus balance. That is why to avoid that, capital and bank each debit and credit 10,000 rupees. Opening as I have taken, and this is the thing. And if you go to profit and loss account, the direct expenses under GTA. See, GTA freight charges we have created under direct expenses. See, created under direct expenses. That is what is showing on the profit and trading account for purchasing goods to receive the goods from the seller. We have paid this one. So it is direct expense. So in the trading account, freight charges will be shown. Other freight charges for which RCM is not applicable and all other any service that yes, the freight charges that is the name in a different way. So they will come under indirect expenses, the next voucher. Okay. So this is the balance sheet and profit account. Then you go to see the reports, GST reports, display more reports, or display more reports, then statutory reports, then GST reports. So GSTR 1 is related to sales liability, sales and amount collected, and that is transferred to 3D. In this one now, we are purchasing the RCM service from GTA and we are paid a liability. That is why the liability, but it is purchasing. The liability is available, the rising on purchase of service. So the ITC you have to claim. So it is doing the 3D. So here 3D, you see, to take the month automatically. It will take the month automatically. July 1st to July 1st automatically. So here, you see, tax on outward charges, that is sales and collected tax. And reverse charge, inward supply. Reverse charge, inward supply. Purchased supply, reverse charge, purchased service, and we are liable to pay on the reverse charge 10,000 rupees is the tax amount, 250, 250 is the CGST and GST. We are not entered in the account, the voucher, but it is showing this liable under reverse charge. So if we take this is one, and the same thing is available to us as ITC under 4, 3.1, then 3.4 eligible ITC. We are getting 250 ITC available. So there is no reduction. Reversal means to reduce something because some ITC we cannot claim. We are not eligible, as sometimes it is blocked gate, they will not allow the credit. In such case, we have to enter the CDA and check the details Alt F1. So here, Alt F1 if you take, see, in the liabilities, there are 5 items in that liable to reverse charge. That is our amount, and all our amounts. This is sales, this is non-GST goods. For sales and RCM, maybe taxable amount will be there and tax will be there. For all of zero rated, nil rated, only taxable amount will be there, tax will not be there. This is the liability. This is from this only it is taken. These all supplied to anybody. This is supplied to unregistered, supplied to composition dealers, PIN dealers, interstate only. So from this it will take. That's okay. And then here input tax credit. Input tax credit. So from sale of import of goods, import of services, and ours is inward supplies applicable to reverse charge to 50 to 50. Another one is there. And excluding all this, all other ITC we get is called as all other input tax credit. From any other mode, we get that means all goods and services we are selling and purchasing. For the purchase, we pay the ITC amount, so that we will get accepted. So for all this one, amount will be there. So all these five will be total amount will be shown here. And anything to be reduced, that will be shown under different sections. Input tax will be removed, reversal, like reducing that. So reversal, if you can, the total amount minus reversal, net amount will be shown here. So no other amount is there. So our total is also the same. Net amount is also 250 for this one, for first transaction. Then you will take up another second transaction. Second transaction is also on the same date. Again, received bill from GTA registered. This is unregistered. This is registered from Warangal, means same state. Registered from Warangal, 20,000 rupees under RCM. So for this also, registered unregistered RCM is applicable. If they select 12% only, FCM is applicable. So registered will take up. So some bill number, whatever they do. And here registered, see, local unregistered have taken now. Local registered 5% will take up and get and this also applicable under labor charge. So guide charges RCM, what is the amount? 20,000 rupees. 20,000 rupees. And for this also, GST, HST will not be calculated. Okay. And some. Third, and right charges RCM 20,000. For this also not amount is not calculated because it is under reverse charge. Alt A, summary of the tax analysis. Alt F1, details of the tax. Detailed tax analysis. Local purchase, CGST, HGST is economic. This is also 2.5, 2.1. For 20,000, it is 1,000 rupees, 500, 500. This CGST, HGST. This also as per calculation. The transaction is the voucher. No amount is there, no tax. And here, amount of tax is subject to reverse charge. So for this also, and say accept this one, accept this. Now again, if you go to balance sheet, here also, here no GSTs, the ITC or anything is not available. But now the liability of the creditor will be two persons, one 10,000 plus 20,000, 30,000 rupees. They are the creditors, that is GDA creditors. And this is the current period loss because purchase 30,000, no income. There is loss, it is profit loss, loss. To go to that profit and loss account, again also. See, right charges RCM direct tax 20 plus 10, 30,000. No sales, no income. So this is a net gross profit. And now see, it is a gross loss because no income. So gross loss 30,000 is got here. Gross loss plus A is gross loss. Net loss also. Okay. And if you go to the display more reports, statutory reports, and the GST reports, we agree. See here. Now the liability is two invoices. Now, so 10 plus so 30,000. So inward charge, inward supplies relating to the reverse charge 30,000. Got this 30,000. First one is 250 each, and second one is 500, 500. So 750, 750, 750, 750. Liability, and this is ITC. The reverse charge ITC is the total, no other amount. Okay. So and then from this available ITC, no reversal there. So that is why it is the net amount. If there is reversal 100 rupees, so net amount will be 650. 750 minus 100. Now no reversal, 750 is the amount you have to pay. So this is the second one. And in the third one, there is another invoice. The third one is on 2nd July, received transport bill also from GTA registered IS interstate. State are same state, okay, same, no problem. But interstate means IGST. Same state means CGST, SGST. So GTA registered in the state from Chennai is our state. It is in the state issued for 50,000 with GST 12% on RCM. That means in his bill, sir, under FCM, we charge you 12%. In his bill, he showed that. So in our bill also we have to show, and that liability will be paid to him. Taxable value plus tax will pay to him. We will pay to government. We don't have any RCM liability. So now we'll take up. So something number will take up. Date is 2nd July. We'll take up 2nd July. Here also 2nd July. And the name is inter-registered, interstate, highest registered 12% here. Person accept. See, all the details are given. Tamil Nadu. And then here for this RCM is not applicable. So here the charges are not right RCM. The same right only without RCM. So without RCM means what, to avoid confusion. Right charges RCM, right charges within brackets no RCM means you get confused. So for the transporting, right charges also transport charges. Transport charges for which RCM is not applicable will be in the name of transport charges. So for that, we'll take up indirect taxes, all other services, the local lorries, transport, engaging lorries, transporting goods, autos, engaging autos and sending goods, all these will come under non-RCM. So only GTA RCM, otherwise no RCM. So we call it as indirect expenses. And here, so the same transport charges, the SAC code, then here taxable. So taxable here it is 12%. Because 12% of the forward charging mechanism. So we will give 12%, 12%, 12%. And then for this 12% is forward charging mechanism. RCM is not applicable. Come down. See, applicable for RCM. Percentage is 12. That is why at the automatic is taking RCM applicable. No. Then this is available. Tax, input tax rate is available. Whether ITC, I mean RCM or forward charging mechanism, whatever it is available. Then service accepted. It is accepted. What is the amount? 15,000. 15,000. So this is under not reverse charge mechanism. Under forward charge mechanism is the GTA will charge this GST in this, but he will mention the declaration. And the RCM GTA will mention the declaration. GST is payable to the recipient under reverse charge. But this person opted for forward charge mechanism, get 12%. He will do the declaration and he will charge the tax. He will not charge tax. RCM GTA will not charge tax, but this person who opted for 12% will charge the tax in his invoice. So in our invoice, so we have to put the tax. That is why the transport charges, reverse charge mechanism is disabled. So it will calculate the tax. It will calculate. So here this is from other state, Chennai. That is why we have to check IGST, we have to check IGST 108. So I'm taking as this is input tax credit now. That is why I'm taking tax. I will tell you later. Okay. So this one, 1,800 rupees, it is calculating automatically from total amount. So in this case, this 1,800 rupees already paid. You paid in this invoice, we paid to the GTA, we will pay to government. Automatically, we will get the RCM. Okay, that's why if you go to the balance sheet, you go to the balance sheet, the duties and taxes, the 1,700 rupees is RCM. I mean, ITC means asset to us. This is on the liability side, showing minus. You click that, you show GST, IGST input, see 1,800 rupees. Okay, so liability will be 1,800, the 10,000, 30,000, and 15,000. Total amount is 45,000 plus 1,000 rupees tax is added. That is why 46,800 is it? Sundry creditors. You click that 10,000, 10,000, 20,000, and 16,800. Look. Now go to profit and loss account. See the RCM right charges we treated as direct expenses. And direct expenses trading account. This one we don't have any RCM liability. We are taking it as under indirect expenses. So in the indirect expenses in the profit and loss account, transport charges shall show. And if you go to the display more reports, go to statute reports, GST reports, 3B. You take, you see here 30,000 rupees is the 30,000 rupees is the RCM liability, two bills, that is 10,000, and here you can see here, click that 10,000 and 20,000, and the tax is that, the tax. Okay. So here, okay, one, to do the details. Okay, one is detailed, this is summary. So here, so liability is the same because the third one is not under RCM, so there is no liability. But we have the ITC for the third one. So here it is showing as see here, reverse charge mechanism. This is not reverse charge mechanism. All other ITC except reverse charge, except all these, any ITC is come under all other ITC. All of input has get 1800. This one 750, and this is the total amount here, and there is no reversal. So this is the total amount. This is the total amount. There is any amount, it will be added. But for ITC, input tax credit, taxable amount will not be shown. Only for liability will be shown. For input tax credit, only ITC will be shown. So 1800, 750, 750, that is the total. No other amount. Total. And from this, if any reversal is there, we will enter it here. So this A minus B, see, A minus B. Yeah, A minus B. A minus B, input tax credit available, tax reversal, that balance amount will be net input tax available. Okay, this you can see. So okay, like this we completed. And every time, whatever we have received the transport bills, the same thing like entries we have to make for the whole month. For the whole month, we have to make entries. Okay, so for this month, we made entries, and now, so in this case, in the entries, we have not made any tax except the forward charge mechanism. For reverse charge mechanism, we have not mentioned any tax, but we have to pay tax. This is the ITC. For that, we have to make a provision, that is, we have to create the liability to pay. Like RCM liability we have to create, and RCM ITC we have to create. Both create, we have to create. How you will create that? Here it is showing in the statutory reports, GST reports. It is showing. See, liability it is showing. Liability it is showing 750, 750. That's all. ITC it is showing 750, 750. Both for RCM. This is not under RCM, so we will not touch it. Automatically, we got the RCM because amount is paid to the GTA. GTA will go to the government, so we got that. We need that pay here. Liability is there, and this is there. So now we have to create the liability and ITC. Both we have to create and pay the liability and claim the ITC. How we will create? Come back. So here, the GST reports. If you click TB, you will get TB or one. Come back, and here GST reports. At the end, you see other reports. If you click, you will know. There will be many items, but one is there here. In reverse charge supplies, so we click that, and it's showing total ITC, liability and ITC. This is liability, this is ITC. 1,500, 1,500, 1,500. And this is liability, ITC. Liability from reverse charge, input tax credit from reverse charge. Okay, liability and ITC. This to be book means we have to create. We are not entered anywhere in the book. It is shown in the report. We have to create, then the report will work. So this is to be total amount, and we have to book that. Still, we have not booked. Balance to be booked. The same thing is shown. When you book that, this will come here liability or ITC book. Liability if you book, liability book. ITC book. ITC book means creating. So here we can create liability separately and input tax credit separately, but both liability and input tax credit both we can create at a time. But we have to create separately for registered dealers, separately for unregistered dealers. Both liability as well as ITC, RCM liability and ITC can be created at a time, but different, both separately for registered dealers and unregistered dealers. So how we will do here? Now here, you see, first you select either the input tax credit you select this one. First you select registered dealer. Take that. So their details are given. So GTA registered. So is the taxable amount, CGST, HGST, and the taxable amount. This is to be booked. This is the total liability. This is liability we click. So this is the total liability, and we have not booked anything. So liability to be booked. we will book it. So we should not do manually. Go to, I mean, in the voucher, see here on the right side, Control J is there. Alt J, sorry. Alt J. That means Alt J means stat adjustment means stat means statutory adjustment. You have to go to the statutory adjustment. What is the tax? Tax type is GST. And then what you are doing adjustment? Creating liability and ITC. Here, increase in tax liability separately, increase in input tax credit separately, two items plus registered and unregistered. Totally, four items you have to create. Liability we have to create and input tax credit you have to create. Instead of that, you can get both at a time because at the end of the month only, after completing all the entries, at the end of the month, create liability, create ITC. So here, increase tax liability and input tax, both we are creating. Enter. So what is this? First one is we are creating this liability and input tax income for the purchases from registered dealer, separate for registered dealer and registered dealer. So select this, enter, and this entry is to be made on 31st month and month end 31st July. That is the month, no? July. So on 31st, let's see, booked RCM liability and RCM input tax. We are creating both, we are taking increase in tax liability and input tax credit. So here, liability is credit, input tax credit is asset will be debit. So we have to debit taxes, we have to debit as well as credit. So debit is input tax, credit is liability. To differentiate that, CGST is to be debited. Again, CGST is to be debited. Liability, input tax credit is to be debited. Liability is to be debited. We do different names. For the input tax credit, we call it as CGST input, HGST input, IGST input, we call that. And for liability, we call it as CGST RCM, means RCM liability. So we have to take here, simply along with other, after paying the liability, we can claim the ITC. This ITC along with other ITC, all other ITC, we can club together. Totally we can use for setup of any other liability. So this RCM, I mean, ITC available in our books cannot be adjusted against the RCM liability. RCM liability is always to be paid in cash because we are paying to the supplier, supplier is paying to the government. So we are paying money to supplier, he is paying to the government. So we are getting the ITC. But here we are not paid anything. So we have to pay now. RCM, we have to pay now, then only we can pay the ITC. So CGST input are 2.5%. Amount is for regular dealer is 20,000. 20,000, it is 500 rupees. That is 5.25%. 25% means 25% means 5% out of 20,000, 5% is 1,000, 25% is 500. Again, it will come credit. Again, you click debit, then CGST out input, then HGST input also. HGST we can do one thing. For the input tax credit, simply we can say CGST, HGST along with all other things. For liability only, we can say CGST, CGST, RCM, HGST, RCM. For this input, if you make the all other, they are collecting from the sales, then you have to make it as CGST output. Output tax, input tax, you have to adjust that. So if you do this, input you create for other taxes collected from the forward charge mechanism, then we have to say CGST output tax, input tax. Otherwise, if you take only CGST for both payment of paid amount as well as collected amount, for both you can use simply GST, CGST. So both debit will be there, credit will be there. But here, if you do like this, input tax credit, debit will be there, output tax credit will be there. Okay, like that. So for this also 500 rupees. And then so ITC is created as a liability. Liability is called as same CGST. It is input. It is RCM, liability credit. So CGST, RCM. So 2.4%, 20,000. It is also 500 rupees. And then HGST, RCM. HGST, RCM is also 2.5%, 20,000, 500 rupees. And you have to give the details. Say this is from the registered dealer. So take registered dealer, local registered. So for unlocal it is 12% tax same. That is not. We are taking about only the RCM. So registered, you take up all the details record and at the end take service. So accepted. So we have created both for the liability book 20,500, 500. Balance to be booked, nothing is there. Escape, come here. See, here it is showing only liability. Here, liability we book and ITC also. So liability 1,000, ITC 1,000. So now this is for registered persons, registered person. Now we will create for unregistered people. So again go to stat adjustment, GST, and now same thing. Tax liability, increase tax liability and the input tax credit. This is for unregistered dealers. The first one is registered. Now unregistered dealers, same date, that is see 31st July only, same date. And here also, this is also when it is registered unregistered, we have to pay. So CGST input 2.5% of 10,000. Unregistered is 10,000. Is 250. Then come down again debit HGST input. HGST 2.5%, 250. Then credit HGST RCM. It is also 2.10%. Then 10,000, 250. And again, now it is CGST RCM. is 2.5% of 10,000, 250. So input tax credit, we created debit, and RCM liability created credit. Now come down, yes, see the details here. Now we have taken registered dealer, unregistered dealer. First one is registered, now unregistered dealer. Then we have taken the details unregistered. Now services, accept, accept. This is completed. Now you see, so liability booked. So to be booked, nothing. So come down, see. Both registered dealer, unregistered dealer, both they were charging now. Liability is booked and ITC is booked. This is done at the end of the month. This is for this month. So we completed the creation, everything, done now the month. Now if you go to the balance sheet, now you can see balance sheet. If you see, you will see only 1,800 rupees forward charge mechanism only. This one created liability and ITC, each will be set off. See here, 1,800. So 1,800 rupees the IGST output, it is FCM. So CGST output and input and SGST input, we created the RCM. Debit means ITC we created, liability we created, both we created. That is why the balance will be only showing. So if you pay this, only ITC will have. Now liability have ITC both. So this is both are there, both debit and credit. So the net effect will be only 1,000 showing. In the profit and loss, there is no difference. Profit and loss account only RCM paid, direct RCM paid, RCM, and then transport charges, non-RCM, 18,000 and 30,000. Okay. And now we completed, but it will not show any effect on the report. Report in the everything will be there. And here we go to other reports. In the other reports, go to the so all this liability and ITC booked already. Now what we have to do is, so this month we completed everything, and then in the next month, 20th is the last date for filing the GST to be 2-1 will file in the on the 1st and 11th will pay. That is only for showing the liability of sales. So sales only will disclose, and this ITC and everything will be disclosed on GST. So on 20th we will file that. Before filing that, we have to make adjustments, payments, everything. So before filing that, we have to make the payment of RCM in cash. And if you make the payment, the ITC we can claim, and we can take along with other ITC available, that we can use it to set off our any other liabilities, forward charging mechanism from sale of goods. So in that we can adjust this ITC, and still after adjusting, if something is payable, that also will be paid. First of all, RCM amount will be paid. If you pay the RCM amount in the portal, you pay to show RCM bill, then automatically we will get the ITC. So what we do now, we have to make the payment. When you will make the payment next month. So before the 20th, before filing, so we may file it on 18th, 19th, or 20th. Then itself we will make the payment first. Then we will pay. If you make the payment first, then you can file this ITC automatically. We can claim. So payments, we have to go payment. When you will pay, you will pay on any day. But for license to release, license to vessel, you will get any day. But for you are working with unlicensed, that is education board, then only first and second will come. I am taking second August. July means the month of August we will fight. Take the payment and fight. So second August I am taking. In the second August, the payment we can do debit. So the license is see RCM liability we created. That is to be debited and bank account or cash account. Generally, all tax are to be paid by bank only, and bank account will be credited. So that is instead of doing manually, you can see Control F autofill. You click or in the keyboard, we Control F to click. This is autofill. Start payment is statutory payment. The payment related to the act. And then what is the tax you are paying? GST. And what you are paying, whether other than reverse charge or reverse charge. We are paying reverse charge. So select reverse charge. And what is the period? 1 July to 31. So this is what we are paying. See, statutory payment for GST, payment type, tax, reverse charge. Now, what to do? So both the liabilities. So RCM, this one. What is the amount available? To be paid 750, 250, and 500. And then again debit. Then you take HGST liability. HGST RCM, you take the same thing 750, total 1,500 rupees. Then credit, we are making the payment through bank. So I created already opening balance, capital and bank, 10,000. Out of that, now we are paying 1,500 rupees. So 1,500, 8,500 rupees will be the balance in bank. Then accept, then come down. Instrument number means check number 1, 2, 3, 4, 5, 6. Then 6 digits that I am taking. And then here give the details. Go to yes. And here, how you paid? Paid by check, by selecting them. Or you can pay by credit card, or NEFT or RTGS, or net banking, anything. We are paying by check. So that is taken. Bank is SBI. Okay, State Bank of India. All of the details will be given. And the number, that is, if you send by in online GST, I mean, what you call IFS or RTGS, you make, they will give the number. That number will be affected. Payment paid 28 will pay. And instrument number will check the number 1, 2, 3, 4, 5, 6. We have to given. And the ship date is also 28. So we are making the payment. So amount is paid. Now go to the balance sheet. See, liability is paid. So now it is showing 3,300. Owned ITC. Say 8,800 ITC. That is for forward charge. For reverse charge, 2 items ITC. There, the liability was there. So it was clear, amount is paid. So we can claim all this. This is forward charge mechanism. This is also added to that. Any other liability, I mean ITC, total amount will be available. It's showing 3,300. ITC means asset. Showing this one. And this is the bank account balance. And after this completed, now on 20th, when you are making the, when you are filing the GSTR 3B, then filing, then this ITC, we have any other more, total ITC can be adjusted against the liability payable. Liability means, leave this off, this is already paid. And any other forward charge mechanism, purchase of goods, any other services, all these are, amount ITC, we have to adjust against the liability. So we gave services, we sold goods, we collected tax that is to be paid to government. So before paying, this ITC can be adjusted against the payment and the balance will be paid. If it is more, we need not pay anything, the balance will be transferred to next month carried forward. This is about reverse charge mechanism. That is entries in the book. Generally, what is the regular provisions will everybody will tell, but this accounting treatment in the books, mostly 90% people in the institute, they will not show this working in the tally file. Only provisions, what is meant by that, what is the provisions, they will tell, and this accounting, they will not tell you. Okay. So with this, I'm closing this. So tomorrow we will come up with a new topic.